Hi traders, this is Brad Gilbert with the FX Market Insight for the 4th of June. All right, now let's just have a look at the currencies where they opened up in Asia here this morning. Now you've got most of the currencies like the Aussie and Kiwi. I mean, there hasn't been a lot going on the open, which is a good thing. Generally means there's no sort of major carnage over the weekend. But if you look at the major currency pairs, sterling a little bit higher, euro a bit sideways, dollar CAD sideways, and dollar yen a little bit higher, but sort of closed out the weekends trading sideways. Now, you wouldn't think too much was going on behind the scenes. Like you look at the price action here, obviously a little bit of a bump up and down on most currency pairs, and that's revolving around the non-farm payrolls. But what I wanted to highlight was basically you have a look at the currencies, it doesn't look like there's a hell of a lot going on. And it's very surprising because if we come back over here just to look at the non-farm payrolls, you know, it is the most aggressive number outside a Fed announcement. And you look at the actual data here, I'm a little bit dumbfounded as to, well, not completely dumbfounded, but why it isn't sort of massively higher. Non-farm payrolls, 223 versus 188. That's a pretty good variance in this day and age. The unemployment rate, 3.8%. That's at 18-year lows. Then you look at the real major bit of data that they're looking at the moment, the Fed. Month-on-month average earnings, 0.3, a little bit higher than expected. And then you've also got, let me just move that screen back down, the year-on-year at 2.7. So once again, that's better than expected. So the whole, on the face of it, the non-farm payrolls were massively strong. Definitely, market is factoring in a rate hike for next meeting and potentially 4. Once again, we're going from this situation where there's 3, now there's potentially 4. It comes around to the data. So these numbers all really strong. As I said, I'm a bit dumbfounded, a bit surprised immediately that the numbers weren't, like the currencies weren't 100 points askew from where they were before the release. The US dollar should be a lot stronger. Now let's just have a look, just before I switch over and we answer why they're not, let's just have a look at these numbers. Now the UK manufacturing numbers, this is a pretty strong number, 54.4. Once again, coming back, giving that UK economy some solid grounding, and that led to sterling rallying against the euro and also the dollar. Now, if I just come back, I just want to highlight, like, we've got these massive, strong US numbers. Now, as I said, I expected for all money that the US dollar would be a lot stronger. If I just change the screens here, all right, so what we're looking at is a massive geopolitical head kick, and that's primarily, once again, coming back to Trump. Now, there's all sorts of things about pardoning himself with regards things around the elections, all that sort of stuff. That's just crazy talk. What the major focus is here, we're looking at the international stuff. US isolated at G7. Now, what they are talking about is he's introduced steel and aluminium tariffs once again on Mexico, Canada, and the European Union. Right now, he's not making any friends here, and they are expecting a major retaliation. There's a G7 on this weekend. We should hear some pretty tough talk out of the EU. I'd say Canada and Mexico, all these countries will get together and they will see the injustice and start to act accordingly. Now, Bank of Canada, now they are caught up in the whole rate hike sort of scenario. Now, there's a rate hike situation from the Bank of Canada potentially next month. Now we've got the NAFTA situation, and also we've got oil, which is starting to fall. So I think dollar CAD is going to be a good trade to the top side coming up. Sterling, on the back of those manufacturing numbers, started to rally, and then it's all about the rest of the news is just about all this trade rubbish. So now let me just come back to the majors, and this is where you really need to isolate the best trading situations. And if I come back to the majors there, you can start to see where the let me just move that screen. Okay, so we've got to say some of the major situations now. Just highlighting where I can see like everything's a little bit off center. Now the UK, some of the data is coming back a little bit stronger. So we are starting to see sterling sort of make some recovery from that big sell-off last month. The euro, well, okay, we've got really strong US numbers, but we've also got that situation in Italy surprising to me that it has actually sort of really slowed down. Looks like the two right-wing parties have come to some sort of agreement for the moment. So that's a positive euro situation on top of a positive US situation. So that's why euro is trading sideways. You've got, well, a little bit of sterling strength dominating sterling. Don't forget we've got Brexit as another major issue there. Dollar CAD, this is where dollar CAD's a little bit tricky, right? So we've got oil now at 65 bucks. It wasn't that long ago. It was up around 72, 73. It's heading south. So oil is falling. You would expect dollar CAD to start to move towards 130 the figure at least. But then you've also got the whole trade NAFTA situation hanging over it. You've also got the Bank of Canada looking to potentially raise rates. So some major events offsetting each other, and that's why dollar CAD is trading sideways. If anything, the dollar, I think it should sort of stand out against dollar yen. We have got a bit of a resistance level here. I would expect that to trade higher, although once again, this is where those geopolitical trade issues, it creates a massive issue for potential global growth, etc. So that's where dollar yen, you know, or the yen, buying yen as a safe haven trade, may be slowing that move down in dollar yen. Now, Aussie and Kiwi, they've done quite well out of all the unrest in the European Union, around Italy, bit of unrest in Spain. So I think we've got some key data coming up this week, and that's where we really need to sort of start to focus our attention, because this is where the moves will come from. Now, it's Monday. Not very often we have some major events coming out on Monday. We do have, today we've got Aussie retail sales figures and also UK construction PMI. So it's a couple of good numbers to really give those currency pairs some immediate momentum to start the week. The good thing is they've opened the markets. There's been no major movements over the weekend, so that's a good thing. We are still waiting to hear more about from the G7, see what they've got to say. But we should get a potential move here or direction for the Aussie and sterling. Right, that's your immediate attention. But don't hold yourself back. Start to have a look through the rest of the week. Work out your schedule. Now, if you're working full time, then work out the sessions. Now, don't try and squeeze everything in. If it fits in with your schedule, then that's great. Then there's a potential opportunity. But as you go through the list here, you'll start to see there's a number of opportunities as we go down through the week, and then across all currency pairs. So the euro will be in play. Okay, dollar CAD, sterling, the US dollar, everything's sort of up for grabs here. And that's going to give us plenty of opportunities for the majors, and also those crosses associated with those key pairs. Now, the big one, I mean, dollar CAD, as I said, has got a lot going on, but it also has some major data, and its employment numbers this month again coming the week after the US non-farm payrolls. That gives us a great opportunity to finish the week, especially with sterling manufacturing numbers there as well. So coming through the week, just plan out your major events. What is going to, as I said, work for your schedule. What I found is if you start bending your lifestyle around the markets, you can get very fatigued, very anxious, and then next thing you know, one bad trade starts to lead to a brain explosion and you're all over the place. So that's one of the things. So plan your week now. Have a look at the major currencies, see where these levels are, and we can start to sort of place some trades around that sort of next best trading opportunity. What we're looking for right at the moment is momentum, right? We need the momentum to come back in the market, and that's where we can start to sort of really see exactly what's going on. So just keep an eye on also, we've got the US dollar here. You can start to see the US 10 years back at 290, the 2.9%, I should say. And the dollar, you know, a little bit sideways. As I said, if those geopolitical events weren't simmering away, I think the dollar would be up towards 95, the figure on the dollar index, because those US numbers on Friday, you couldn't get much better. Okay, so as I said, just follow the economic numbers. Today we've got the Aussie retail sales, UK construction PMI. These are going to be your two major releases, and the dollar, it is a bit sideways at the moment. So what we have to be doing is keeping a very close eye on your news pages. Just work out where these various events are going to come up. And as I said, they probably won't come out until the European and North American session. So don't get too heavily involved straight away. That Aussie release is really a short-term affair. I mean, the Aussies has been just whipping about with the the US dollar, and the correlations have been breaking down last week. So let's just have a close look at that as we go forward as well. All right, guys, that's pretty much it from me. Bit of a slow start to the week, but plenty of opportunities. All right, guys, we'll see you in the trade zone. Have a good week. Cheerio.